Hello, everyone. Happy Unemployment Thursday. How's everyone doing? Good morning, Patrick. Good morning, John. Good morning, Jacob. Good morning, OD Green. Good morning, Royal Palms. Good morning, Rusty and Patrick over on Rumble. So, how is everyone doing today? Good morning, David. Rate cuts, well, it was already baked in, but now we're getting the rally continued. We got OPEX tomorrow, which is about all we have tomorrow. Today we had jobless claims, which were better than expected. But we remember I mentioned last week, since the prior week was for the holiday week of Labor Day, holiday weeks are normally distorted, and it was 264, dropping back to 231. So, but every market's still celebrating everything. Again, no topping patterns yet. Getting tired of this market. The market's just going to keep going until it doesn't. I think it's going to take something out of the blue to stop this thing. NVDA investing $5 billion in Intel share purchase. Intel up over 30%. Hello, I would not be chasing Intel, by the way. I'd be watching for a backfill pattern. Okay, so Daniel, good morning. What else do we have? We have Philly Fed numbers. Prices paid dropping substantially. Very interesting there. Employment down also. So we got the consumer board up next, leading index, which has been negative forever. And then we got our 418-week bill auctions. What's on my mind? We have option expiration tomorrow. That's what's on my mind now. See if we switch stuff. But yields, longer-term yields are starting to climb a little. Dollar tested very key support and reversed yesterday. Very interesting with the dollar. Rig counts tomorrow also. But today, we'll buy it all except for AMD. This market is so like every buy, like NVIDIA investing in Intel, and AMD gets dumped. Oh, this market is crazy. This market, with record margin debt, just be careful out there. Record margin debt, fueling the market higher. Look at that. CrowdStrike up nearly 6%. Synopsis up over 7.5%. Is buy it all. It's selling volatility. Also volatility after the Fed meeting collapsing back down. So we're again sell vol and buy everything. Well, except for AMD. Let's just refresh this. And don't touch consumer defensive because, oh my goodness, just go chasing technology. Everything's higher except for utility and consumer defensive. So Fed watch now for next meeting, which is in 41 days, has another cut priced in, and then another cut priced in for December. So still 2 more cuts this year. Fear and greed, still solidly in greed. Schiller PE, a slight drop to 39.67. Rush out and buy everything in the dirt cheap market. We got FedEx after the close. That'll be interesting. And then we remember nothing tomorrow. Well, Money Hero, I guess. If you're trading Money Hero, good luck. FedEx after the close with their guidance. So, hey Rick, how you doing? So, again, just keeps on grinding higher. Grinding higher. There's your S&P. S&P. Let's get back to the daily. The daily, we had the little, what I was looking for yesterday, we had the little roll gap fill. And then the move back up. Cycle's still at the top. Very overbought, but not short in this thing. I think we're going to get some kind of another, at least a short-term blow off top. I'm going to be looking for next week, especially with OPEX tomorrow, because you know how I feel about OPEX days. Good morning, Ted. So that's where we sit there. If we do, I mean, we're already pulling back a little here. Little quick reversal here. Key support is still, I'm looking at the 66.75 if we keep pulling back. Between where we are now, essentially the 66.80, 283 to 66.75, I'm looking for a support pattern with the rising 4-hour rotation zone. But that does not necessarily mean we'll take out new highs. I'm going to be using these minor harmonics today. I'll put them up here now. If we do go to new highs, I'm using this minor one, 67.33. Other than that, I'm watching the retracements from this little move back. And from the retracements going up this morning, if we do pull back and break the 66.75 level, I'm really focused on my key line in the sand is 66.65. That's going to be very key. We have a support base there, and that's a 50% harmonic and close to the bottom of the 4-hour rotation zone. All right, but overall, you know, cannot really get short this market yet without a stronger pattern, because we're going into like the 4-hour rotation zone, and the 4-hour rotation zone has held, you know, it's held the rotations going up for the last number of days. And we already did the roll gap fill yesterday. NASDAQ acting strong. Hey, Sterling. You know, Sterling, your job just keeps getting in the way. I'm glad you're super busy, Sterling. I'm glad you're super busy. The car market must really be chugging along. So, right now, again, same thing with NASDAQ acting strong with all the tech stocks today. I'm watching closer to this level between this 24,600 to 24,675 on any pullback. Other than that, still using the same harmonics from before. If we do break above 24,762, 24,849, 850 is my next key level. My major line in the sand for the NASDAQ is back at 24.5 over the next couple days. The Dow, big reversal here coming on with the Dow in the 4-hour. We're getting some selling pressure. The market's getting, again, it's way overextended. However, can it continue to be more overextended? Yes. The Dow support level is about 46,300. That's what I'm watching on a continued Dow pullback. That's what I'm looking for on the Dow pullback. Again, the Dow is not the one I'm looking to even possibly make new highs. First would be NASDAQ, then possibly the S&P. The Russell took off yesterday. Coming up, we had 2480. This is why I use these harmonic levels. And you don't have to use them, but I find them helpful to know at least where to possibly take profits or aggressively move up a stop. All right, we spiked down, not quite to the gap fill, but to a very key support level, spiking up to that 240 harmonic and then dropping back down. Russell trying to rotate up again and pulling back into the 4-hour rotation zone. So I'm going to be watching for support here. If you use yesterday's crazy price action, we're right between the 50 and the 62.5. So this, my line in the sand for this is 24.35. 24.35. Then I won't look for pullback trades anymore if it drops below that. But other than that, I'll be looking for a possible buy in here. Possible buy in this area right now. You have FOMO big time, Rick? Well, FOMO can be a killer in this market. Like, don't have FOMO on Intel, anybody. Don't have FOMO if you're not already long. All right, that thing will backfill. It might take a little bit, but it will backfill a bit. VIX, again. Oh, interesting. We're getting, with this little pullback, we're getting a little of VIX up. Could be a % buy today. It will be interesting to see where the VIX closes. Would I be aggressively doing it with a OpEx tomorrow? No, but it's going to be interesting. The key support coming, dropping back down, and now rotating up a little this morning. We'll have to see if that continues. The DAX also above yesterday's high was the breakout percent B buy, and it looks like it's definitely going to close above that. So that's a little scalpy trade back in the rotation zone. Again, the only thing that makes me look at the longer term for a buy pattern on the DAX is if it can get back above 23,900. Other than that, it's just little pop plays. Yields. We do have officially confirmed. Looks like it'll trigger against the rotation zone. But even on a pullback here, I'm going to be watching for this to probably hit the weekly rotation zone over next week. But we can still get pullbacks here. All right, it is against the daily rotation zone, so it's still the lower probability. But the VIX saying, the yield saying, whoa, 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 not so fast. Especially yesterday, we got the rate cuts and the yields bounce. Today, at least confirming, we'll have to see how this closes, but at least confirming a double bottom pattern. The 30-year, also no double bottom there, but this was a percent B buy in the 30-year yields. It has, well, on the breakout, it still has to close above yesterday's high at 4.9694. Does this mean yields are going to skyrocket? No, but I'm watching for at least the potential bottoming pattern. Given that yields are very oversold, this is 30-year yields. And next week could be setting up for another percent B buy on a weekly basis. So interesting with the yields. Good morning, Mark. What else do we have? We have crude. This is a roll gap down. If you do back adjusted C, we're still holding support. This was just on a roll gap down. So it's holding a lower support level, but I'm still watching for some buy setups unless we drop back below 63.30 on a closing basis, even with the roll. Natty gas. Natty gas, even with the spike from Tuesday, it's still a valid potential double top with the first and second patterns, and you still have a roll gap left behind. Nowhere near confirming or triggering yet, but it's something if you're a natty gas trader to keep an eye on. Now, could we come back down here to close to 0.29 and still hold support? And if we hold support, have a buy set up, I'd still be looking for a buy down here unless the double triggers. I'd still be looking for potential buy setups down here unless the double triggers. Gold. Gold does have a lopsided, so it's lower probability, but it's a lopsided double that's confirmed but not triggered. And would I be shorting gold off this? No. No, but it is interesting that it did confirm a potential minor double top, which if it does trigger would just be a pullback further into the rotation zone for buying opportunities. Okay, we're out of overbought conditions and cycles are rolling over, but it's not triggered yet. What the truck? Sales of heavy trucks are falling. Well, again, we're in a raw celebrate everything, but underlying stuff is not doing so well. So there you go with gold. Silver. Silver does not have anything, and it's got a little triple bottom pattern there, but nothing much in silver. Going to be looking tomorrow. If this does, we have the percent B buy potentially. All right. Potentially set up for tomorrow. So if this maintains like this, tomorrow I will be watching today's high. Tomorrow very early I will be watching. I will have an alert set because it's come down and found support. Does that mean it's going to necessarily go to new highs? No. But it could be an interesting, at least, bounce play that has the potential to go to new highs. All right, dollar index, another fascinating one. breaking down very briefly, spiking down, retested lows from July 1st, and looking at this, setting up a percent B buy bar, and today that was taken out on the dollar index. So this could also be setting up a weekly percent B buy bar for next week. All right, so too many people are the bearishness of the dollar is massive. Now, I'm not saying this can't backfill again, but I am watching for some of these bottoming patterns still, especially with the move yesterday. With all right, we're breaking down, we were cutting the rates. Oh wait, strong reversal in the dollar. Euro still has to break down. We're probably going to get a bounce into the rotation zone, but the next move up is going to be the secondary reaction of the euro, and I'm going to be paying very close attention to this. So that's where we sit there. Spiders and the Qs. Paying more attention to the... right now, we have yesterday's close. I'm paying attention to yesterday's open and close. Yesterday's open at 660. So if we roll over, paying close attention to 660.01 technically. And then if we break below that, 659.18. Other than that, we do have now, we have an official, at least daily pausing bar. So... and by the way, if this takes off higher again, if we get that move, this is where I'd use the reverse harmonics, please. This is perfect for using your reverse harmonics. So if we find some buying pressure and it rotates back up, and we do take out this two top area, not a double top, but this two top area, 662.71 and 663.75 are your key targets. The Qs, we finally got the pausing bar 2 confirmed yesterday. Again, with the Qs, let's put our reverse harmonics because it's going to be a gap up. So we have 593.92, which we're gapping above, 594.98, which looks like we're going to open at. Above there, it's the prior harmonic at 597.03. On any down move now, on any pullback, I will use the 593.92 to 594 as the first support level, and then the 592.82 area for the next support level. Bitcoin still now holding the rotation zone. Going to watch to see if this double pattern gets invalidated. We're still not there yet. So that's all I'm keeping an eye on there. What do I make of copper? What do I make of copper? Copper, unless it takes, I'm still looking for pullback stuff on this. These are not big moves. I'm still looking for potential rotation back up. Tomorrow we might have a percent beat buy, but unless it can get above that 50, I'm still cautiously bullish. Now, if we lose this level, if we lose about 452, not going to, I'll be very patient. But right now, still looking for potential fall, at least bounce setups. We're still making higher highs and potentially higher lows. That pattern would be broken if we take out Monday, September 8th. But again, these are not. If you're looking for big power moves in copper, this is not the. I'd be looking at other markets. Okay, these are, copper is now tightly trading against very major. Remember, we had that big consolidation, May, June, into the beginning of July before the breakout, and then we fell back below it. Now we're back in that same area. So there's a lot of resistance to work through. So on buy setups, they're with tight stops and tight targets. There you go. There you go, Rick. All right. Here you go with the Intel. Let's go to your weekly. Your weekly magnet area is the weekly 200. And we're virtually there on the gap up. So, key support, the first level of key support I will be looking at on pullbacks is about 29.75 to 30 over the next while. Okay? If it does keep rallying above the 200, next key resistance is about 34.50 from the harmonic and from a prior major resistance level before the tumbling down in July. Yes, you're getting investment from NVIDIA, but that does not mean things are going to turn around instantly. It formed a very nice base. Now it's popping above it, but can this easily come back down, especially if it breaks this 29.75 area and retests the breakout level? Yes, it can over the next few weeks. So if you're chasing this higher, you better have a very long-term perspective because this could backfill. All right? On stuff like this, especially this long-term base, it's just being rushed into by the NVIDIA investment. Yes, and it's substantial, but it doesn't mean they get to turn things around. Like, do you think their next earnings report is going to be mind-blowing? Off just an investment? No, because it takes time to reconfigure all these fabs things and to set things up for NVIDIA. Longer term? Yes. Longer term, yes. Remember, they have not been making money either on a P/E rate. They still get revenue, but they have not had net earnings. And their net earnings drop negative. So can this bring net earnings potentially closer to positive again? Yeah, but we don't even have positive earnings yet. So just be careful if you're trying to chase this higher in the short term. NVIDIA on the daily just sitting there, little gap up, but sitting there in this huge consolidation area. Nothing going on with that. AMD dropping here. Remember also AMD has triggered the double top. It's still against the rotation zone, but we could still see more backfill in AMD. Can we see 20 again in Intel? If we hit a massive recession, yeah, and AI takes a dive, but you're in the 20s, like $20. That one might be a little tough. But again, there's no reason to just magically chase this. There's no reason to magically chase this. We have a lot, and you see here before. You see all this prior support before that was broken, turned into resistance. Now on a backfill here, it would be turning into major support. So that's what we have there. All right, let's just peek at the S&P going into the open. Pulling back nicely into the where the rotation zone? Where refresh, please. Oh, trading views up very slow today. So again, nothing's really changed. Nothing's really changed. Again, the key line in the sand is the 665. Other than that, we'll be looking for some buy bounce plays, not necessarily new highs in the S&P. First thing on any pullbacks for me is the NASDAQ, and we're operating very slow on the rotation zones. You're welcome, OD Green. With that, I will see everyone tomorrow morning for option expiration. Until then, have a wonderful, wonderful trading day. Bye for now.